We're back again, joined by an OG of this channel, the legendary Fibo Swanny. He needs absolutely no introduction. However, if you're not familiar with Fibo Swanny, he's been here for a long time. We've been following a thread of analysis with Mr. Swanny for the past, I think this goes back to about 2022 maybe now. And we have been, we have been reconvening throughout this whole bull market cycle. And Swanny continues to overlay these very long-term macro targets that have been incredibly accurate. So I humbly implore you to check out the prior videos in this series if you haven't already seen them. But I will hand it over to Swanny here. I want you to just go through your full-on look, and I'm sure we'll get to all of the beautiful macro stuff. And I'm sure the question of is 200,000 still still on the board, as many people have asked, will be broadened up. So yeah, man, I'll hand it over to you. Thanks as always for joining in, and let's get to it.
Absolutely. Thanks, Crown, for having me. This is awesome. Those old videos have been kind of fun and kind of rocking and rolling as we're going here. Yeah. So good times. I'm going to start out. It's all going to be Bitcoin today, but I'm going to start out with a 4 hour on the daily real quick, but I'm going to focus a little bit more on the longer term here in a sec. But let's look at the 4 hour here, the reason I want to show you the 4 hour on the daily is just to show a little bit of foundation that could be building as we move forward here, because we're kind of on this I guess ledge to where it's either going to hold or it's not, and this is kind of right where we're at. So, and I'll show you here on the charts. But starting out with BTC on the 4 hour, what I was watching for here. We went into a bear zone down here back on, what was it, October 29th. And then went into this bear zones, had a nice little ABC correction here on the downside. I had two targets in here to buy while it was moving to the downside, and that goes because of this previous, if you go back another zone, it starts here, you put in your fibs, and the extensions come in at 104 to 105, basically right here. I had a target at 104. I think I had it at 104, 450 or something like that, which hit, of course. And as you can see over here, it came down and hit, and then went down and went back up and tested it as resistance, and then it fell. And usually I buy on these, and then if I get 3 consecutive settles underneath, I get out. But as you can see here, the 3 consecutive was down here. So I was like, I like the way this is setting up. And then I had an order in here at 99,450 to get another buy in here. So I bought at these two and got the average in here. And I like that it wicked down to this 98 area. So, and that's going to be pretty key when we start looking at some of these longer term looks. So I bought these two, and then we just went into the bear zone last night. So I actually bought again. So I got 3 tranches, I guess you would say. I say 10% each. So I'm 30% long of the capital that I have in my BTC bucket, basically. So I got 3 tranches in here, and then these are the targets that I have for going forward. So this is the key level that I really wanted to show on the 4 hour. And we got the first bull zone with the bulls with a little bit of momentum, not a ton, but it's at least a start, which helps kind of not solidify the low, but it kind of raises the probability that low might be in. But not just yet. So flipping over to the daily, same kind of thing. I had an order here on the target while it was in the bear zone on this correction. And for the daily, it was at 101,655 on here, and that target hit. And we wicked down a few times. Never really. I mean, we settled once underneath it, I think, maybe twice. But it was all wicks underneath here, going down to that 98. So I'm long here, and now I'm just waiting. I don't really have a target for this yet. I'm waiting for a move to the upside, get us into a bull zone once it gets back above 112.4, and then that will be into a new bull zone. And then I'll press my position and add, and then take that average and then go forward with some upside targets. If that's going to happen. So that's why it would be nice if the daily was also in a bull zone with the 4 hour, and that's why it's kind of like you're in this limbo land at the moment, or I call liminal space, or anything like you want to kind of jump over a threshold, and I don't know which way that threshold is going to go yet. It could go down and break that 98 to the downside, or we start, ramping up and we break the upside and get the daily rocking and rolling. But since I don't know what the hell is going to go on, and nobody really does, so you want to use the
what?
Wait, what? No, so you use all the indicators in your strategies for the edge that you try to get in the market to figure out which way that's going to go. And so far, I'm still leaning upside with the low end so far at 98. And I'll go into kind of show you some of those reasons. Now, let's go on to the weekly. This one's been, this nice little bull run that we had in here ever since we had this nice little buy on the break of the trend line here. And we've been in the bull zone ever since, going all the way on this nice bull run. But there's some things on here that I like, and it's all the structure of it. So first you have the break of this trend line, and you have the measurement here that brought you right up to the 61.8% level, which is the red here. So if you go to the high to the low, the 61.8% level is right here. And then this move went up there and tagged it right here on this candle, came back down, and then we broke back above it, and then it came down and retested. So this went from the 61.8% level to the high right here, came back down, and then we broke into a new high. And then, of course, we did this stair step ever since, and then it gets back down and tests the high, comes back down and tests the high kind of deal. And we're kind of in this little stair stepping. Now, a couple of other things that I liked in here was this 83 to 91 area was support, and it never got three settles underneath this 83, 548 when it was over here. And then it popped up and then hit the target up here at 122. And of course, we made a little bit higher high later on, which I think it's on this, I thought it was 126. It is 126. 126, 296 has been the high so far here on the Coinbase chart. So we're actually inching down here, and this wick that we had down to that 98 that we saw on the 4 hour and the daily is still sitting well, because the bear zone for this thing to actually turn somewhat bearish for me is when this bear zone hits at 97. But what that does for my system is, when you go into a bear zone, whatever the shallow fib was during the bull zone, you have to have three settles underneath this to break the bullish structure to where a primary trend would go to the bears if we broke that 85.8 to the downside. Now, the risk is if this clicks, if we close a week underneath the 97.8 here and it clicks into the bear zone, the risk will be pretty high probability it's going to go from 97 straight down to that 85 pretty quickly if that breaks. Now, if it doesn't, then we hold here and then we start to take off from here. So the way my system works is, if it ends up doing that, then, you want to reduce. What I would do is I would probably reduce all of my positions, or probably get out of my 4 hour or whatever BTC I have long in my trading, and then just kind of pick all of that up and go where all the other buyers are probably going to be sitting, and it's going to be in the mid 80s. And that way I'll probably be taking a lot more dry powder to buy a lot more if that happens. But for now, and since I'm long, on the 4 hour and the daily, and the weekly still holding this support, I'm gonna maintain that as a possibility of upside. Now, the other thing that I like about this coming down to that 98, so this move to the downside here, if you look at the ADX really hasn't been building any momentum as the price has been working to the downside. It's actually been losing power on a week-over-week basis. So to me, that helps the buying interest at that 98 level kind of come in and kind of hold that as a possible floor moving forward. So I want to focus a lot on this move here as we move into some other charts. But this is this bull run to me is not quite over yet. And the thing is we like I said before, really nobody really knows. But if you have evidence that shows that 98 could hold, then you got to stick to plan. And then if it breaks, then you take your little bit of a loss and reestablish a new position. And I guarantee you that little bit of a loss that I'll take here will not come close to what's made from this run. So and that's basically how strategies should work, right? Small losses, large gains.
That's so usually the idea.
Usually the idea. All right. So that's what I want to focus on here. So if I move on to here, a lot of
Can
people,
I just reformulate your thoughts there for a moment?
yeah, you do whatever
Just
you
for the
want, man.
viewers as
Just
well.
go.
Yeah, right. So, okay, so what you're saying is that as of right now, short-term timeframes for you, represented by the 4-hour, are still having a bullish bias.
Correct.
The
Correct.
4-hour time frame, or basically the short term, could basically oscillate between where we're kind of at right now and as low as, what was that, $97,000 number?
The 97.8 right now. I mean,
Yeah.
this moves a
Okay,
little bit
97,
with
so
how the
about
movement
98.
mark. Yeah, yeah, about
Yeah.
98 if it breaks. Yeah,
And that doesn't hurt any short-term structure. However, if 98 is lost, then we expect down to 85, 86 region. And at that point, that calls into question for you the macro bull market, correct?
Correct.
Okay,
Yeah,
cool.
yeah. If I get 3 weekly settlements under 85.8,
Yeah.
I'm looking at like way lower, like
Right,
60,
right.
70K. Like it's way down, maybe even
Yeah.
lower than that. Because the structure would really break down. Most of the time, if this ends up breaking the shallow fib here and we get 3 settles underneath that 85.8, the next one down here is at 60,000. So, and
Right. Yeah.
so it's going to open up a lot of risk. Now, there is this previous low out here, which was what, 74,420.
Yeah.
So that would be probably a lot where everybody and their brother could be sitting in there with some buys.
Mm.
So that could kind of hold there, but I would say the risk is a lot more if that happens. And of course, if this ends up breaking down to this point, you got to look at momentum and some other things that kind of go on when that's happening. But if this breaks with momentum, that would not be a pretty picture.
Right.
So that's kind of where my line in the sand is. But I really want to watch this the break of the bull zone back into the bear zone, because that will open up a lot of risk to 85. And I want to reduce some exposure, or pretty much all of it probably, to where I would want to be buying more at 85 instead of writing it down with the longs that I have.
Yeah.
I'll probably just kind of eat it up a little bit and go from there. And really, when you look at the average that I have on the ones that I have, I think I'm at a 10, like a 101 average off the ones off my recent buys. So if I get out at 98, I'll take a little bit of a loss. But I'll be looking to get back into 85. Or if it fakes me out and it doesn't get down to that point and comes back up, I'll be reestablishing on a new weekly bull zone, because going a weekly going into the bear would not be a good signal. As you can see back here, when it finally did, it broke the on the blue ones here. If you look at the blue 38.2% level here at 53, went down and touched the 61.8% level. But it was when it broke that, it went into the bear zone, and then we were ugly for a while.
Let me ask you this, Swanny. In the past, has there ever been a weekly break of the bull zone into the bear zone, and the market cycle continue to the upside?
Not really. I don't have it all tagged on here. I'd have to go look. But that's a good question, and I don't remember any. But I'll go back and look, and if there is, I'll send it to you so you can put it in the back on the bottom of the notes. Once we send this out. So,
but off the top of your head, probably not.
Not off the top of my head. I don't remember any.
Okay.
At least since 2016, because that's when I started getting into this mess. So, I don't remember.
Honestly, that's the best place to start most studies, anyways, man. Like you go too far back, and it's just the numbers are too wild. It doesn't make sense anymore.
Yeah, exactly. So yeah, that's kind of my line in the sand and how I approach like primary trend is what I'm talking about, like major bull, major bear. And right now we're still bull, but everything right now is a bearish correction in an overall bullish market at the moment.
Right.
At least that's what the structure is still showing at this point in time. And that's what I wanted to go on to this one, because everybody was looking like, oh my gosh, we're dying and all that kind of stuff. But when you look, the
sky is falling.
Yeah, sky is falling. So what I did was I was looking at the, this long bull run that we've been in since that break of the trend line. That's what I put in here just for a little visual. So what I did was I just looked at all the retracements, right? And we had a lot of them in the 20s, like 20, 21, 22, 21, all that.
And the flavor for this cycle for sure.
Yeah, but we had a couple other large ones that went down to the 31. And so we had a little bit further corrections, but it never broke the pattern or the structure overall, even though we had the 31% corrections. So if
Mm-hmm.
you kind of zoom in where we're at the moment, the 21% that we're at the moment, which matches up a lot of these 21s in the past, is at the low here at that 98, which could be that first signal that maybe that's it. Maybe the 21% is going to be about it. And then we kind of go from there, because that kind of matches up with the previous low over here. And you had a nice little move up, a little full retracement back to this low. And there's there's some buying interest that comes in this area right here. But if this ends up breaking and you go to the 31%, if you just want to put it down to this point, you're looking at around 86, which comes into that 85, 86 area. And that's why if that ends up breaking on the weekly, that's why I'm going to kind of jump out and wait for that move to get a little bit larger correction.
So also some major moving averages on the monthly around 86, 88 as well.
Yeah, exactly. So so right now this looks decent. But then again, you got to be kind of cautiously optimistic, because we're not out of the woods yet. And if we end up getting down to that 31% or whatever, that's where that mid 80s kind of come into play. But so far, the sky is not falling. It's actually the same kind of pattern that we've had since the beginning. It just, for some reason, a lot of people say that this move from 126 to where we're at just seems so much more harsh than the other ones, which I don't really understand.
Because they're in fucking altcoins, man. That's what it is. It really is, dude. It really is. Like, I can't imagine anyone who's been in Bitcoin, even for the past year or two, complaining.
Yeah, I don't know how you can. I mean, it's impossible. I mean, it's crazy.
We are spoiled beyond belief.
Yeah, but I'm just showing like how some of those percentages kind of match up pretty nicely at where those numbers should be. So given that, going on to I got a monthly here. And there's a few things on here that I thought was kind of interesting. And one of them was, if you go back to the high here and that back in 17, and go down to the low, and then finally we broke out above this high right here.
Wow.
And took off. Okay. I took the measurement like I normally do with trend lines. Take the measurement to that point and just double it, basically, is all you're doing. Yeah. And then it matched up really nicely as it hit right here. All the way. It took we went down here and retraced. And even though it came down and messed around with us down here, never had 3 consecutive settles, because I always look for at least 3. And that third one was this nice large green candle back to the upside, came back down and retested support. And right there is like another signal of like, okay, this is good. We're heading higher. So that was one of the things I was looking at, and it matched up pretty nicely. So, and somebody might ask, well, why are you taking into consideration the wicks? Well, this was kind of interesting, because if you actually clone it and just take the tops here,
it'll be
instead.
For the closes.
Yeah, so you can and of course move that, messed up there. Hold on a second. Here, I'll just get a new arrow, and then if you put the arrow to that point, and then clone it, and so you get the same rate of change, and go from that point, you can see that it actually matched up. But then we just had a nice full retracement pretty much back down to the low here before heading higher. But the pattern worked really nicely is what I'm looking at. So now if you take that same scenario to where we are today, and you take that 100% where it held, went down, and then we came back down and retested here, but didn't get quite down to the bottom. And then we started heading higher. If you take that same thing and double it, I mean, you're talking in the 300s. But it could be something that's going to take a lot more time, like this slow, steady grind, instead of those, early 17 and 2020, explosions to the upside kind of stuff. It might be like this steady climb going forward. But a couple of things I was looking at here was, one, I was talking about earlier about the support that held right here, because it came back up and tested and never really broke here, and held support, and then went back to the upside. And then, of course, I put some blue fibs in here just to show that the 106 is kind of that area here on the like just a short, shallow fib. But then 95-ish, I think it's like 94.9 is the 61.8% level. So it could kind of come down here and then head higher. And the reason I kind of like this little zone in here to where it could kind of hold is if you look back at some of the, I mean, we don't have to go through all of them, but they're about the same. If you go like this leg here, kind of did the same thing. It broke the 38.2% level, didn't have 3 settles, had 2, and then went back up. But it also wicked down pretty close to the 61.8% level, which is sort of the same kind of thing that we're looking at the moment. So all of that together is telling me that maybe this is an area that should hold and kind of hold back this, this order block kind of area back here before heading higher. So this whole thing here on the monthly still looks good. But the question is, and I've had timing studies here. I'll show you on the next chart here. I had timing studies. This is one of them that I had on your show way back in freaking December, like the year before, or I don't remember. But what I was looking at was I was taking the high to high, after, first you had the high and then you had the halving and then you had the next high. And this one, I think this was about 183 bars or whatever. It might have been 181. I kind of moved things around, but and then you had this high, and then had the halving, and then you went to the high, and then you had the same thing, high, halving, and then you had the high, which came in October. Which, if you're following a lot of patterns of halvings since the beginning, and matching that same pattern every time, the October 2025 was a spot to where the high should have been in, and the high so far is in October at that 126.
That's what I've been saying. If you believe in the 4-year cycle, then that makes as much sense as anything to be the high.
Right now, yes, exactly, and that's why I'm still in that cautiously optimistic. Because we haven't broke down yet, but we also hit the high on the timing. But if this holds,
it's kind of a signal in and of itself.
Exactly. So that's why you really got to be risk management, stick to your plan, all that kind of stuff. Because
I'm 1,000,000% with you on that. Yeah.
Because this could break down here. I mean, I'm not going to be this, this perma-bull or anything like that. It's always about what the market is bringing to us, right?
Yeah.
Because we can't change the market. So the market.
We deserve it. We've held for so long.
Yeah, exactly. But here's the key here. We hit this, and then of course we haven't hit it yet, but we're hitting right on all these trend lines is what I put in, and then we ended up breaking down. This one we ended up breaking down. But we're so far since the halving, the low here is still not broken down yet. Like I showed on a lot of these other ones, right? We had a little bit of support here. You got some support here that. And then, of course, this whole area in here is still holding and going back bull. Now, I know these are all different time frames, but this is what we're kind of looking at here is we're right on that. That's why at the beginning of the show, I said, like, we're on this ledge. And I don't know if we're going to fall off that ledge or not, but everything that I'm seeing so far based on fibs and all these other things is that it's a slightly better probability that this will hold here. And then what we're going to end up doing is extending these possibilities out further. Now, of course, if we break into the bear zone, then that 209K that I wanted by the end of the year is definitely going to be extended regardless. But if it breaks down here, then yeah, it's that 209 is. I'm going to have to go back to the drawing board. But if it does hold here, that 209 is still in play. But it's going to be a different date, and I'll kind of show you what I'm on that on a couple other charts here. But I really wanted to show this, like the October timing worked perfectly. But the question is, and on everybody's mind, is the 4-year cycle still in play or not? And I lean to where it's not anymore. And if we go to, and that's why I wrote up here, this time is different with a question mark. If you look at this is a 21-day, and I had this one on your show last time too, where I took these trend lines and you broke the trend line to the upside, and it was 18 bars from the break of the trend line to the high on all of these. And then, same thing here. You broke the trend line to the high, 18 bars, 18 bars, blah, blah, blah. But if we go on to this one here, first of all, the first sign that we had with the halvings, if I go back to the halving one, the first sign was making basically, I think it was 61.8% levels. I don't remember exactly what the reason was, but I think there was a 61.8% level held on all of these prior, but this one didn't. This was the first time that we actually made a little bit more of a higher high based on where it broke out. Because all these other ones were like, it went up to the 61.8% level and then went back down, and then we went into the halving. And I think if you look back on this one, If you go from the high here down to the low, the 61.8% level was right here and held and went down and then broke back up. So the first time on this one is here. This was the first time that we got to the 61.8% level right here and then broke higher prior to the halving. So that was that first signal of like, okay, well, maybe we're not on this 4-year cycle anymore, because it kind of messed it up prior to halving, because that was kind of a little different than what we've had in the past. So that was the first sign. Then the second sign was on here, where all these broke the trend line and made a high, and they all made their I don't have the arrow over here, but they all made their objectives up to the 361.8% level, and then broke the trend line, hit the 361, broke the trend line, and this 361 is at the 209K. But but if it held the same pattern, all these 18 bars, the high should have been at February of 25 at 209, which of course did not happen, because we went on this steady run to the upside as this trend line still in play. And this trend line right here is the one I'm talking about right here.
Right.
So right now it's holding at the trend line, and it's also holding at a shallow fib level off the break of the. I always take Fibonacci levels off breaks of trend lines. Or breaks of other things, but any kind of support and resistance. And then if you take it from that point, the intersection there is around 97, which makes sense on my weekly fib levels and all that. So all of that together is the buying interest should hold us here to go higher, because the pattern is not there, because the 18 bars should have had much higher on the 18 bars, just like all the other times. So now this stretches all the way out to July. I think July will see 209.
Wow.
As we go forward.
Okay.
Yeah, it's Q2, and the timing for that comes from.
Sorry, Q3. Yeah.
Yeah, I mean, not to be exact, but sometime between now.
I get it. Yeah.
It's going to be June 12th.
I want the exact second of the high, Swanny. Otherwise, fuck all of this, man.
Yeah, just screw it all. All right. But yeah, so I'm marking this with a question mark, but I'm leaning toward this time's a little different, just because the pattern's just not the same. It's acting a lot different than it was before. We are touching the intersection here and getting some buying interest off of this, while the bulls are still in control here on the momentum. And they're also in the bull zone based on the 21 day here. I had to mess around with some of the numbers for the RSI and the ADX, but when you get it to fit right, it makes a lot of sense going forward. So, and so far we're not close to breaking this on a 21 day pattern, and this is holding support. So that's a good thing, to where helps me lean toward upside possibilities. So I take all of this, and then I just wanted to kind of play with people's minds here and just kind of flip everything around, and then look at the monthly on a inverse. Because if you look at the monthly on an inverse, you look like this thing's just going to fall out of bed forever, right? But there's a couple timing things on here that I really liked. I put the fibs in here. So turn your heads upside down here a second. But if you take the fibs here, and you go to this extension that I talked about before, where this 83 held and didn't have 3 settles here, to where it would continue this way, and it didn't, so it continued that way. I'm looking at the with this holding and making down to where it hit the target at 122 down here. Now, of course, it went to 126, but it hit the target. The thing I was looking at was, if you look at it on this monthly basis, the high here in October. If you go back to the high here, it hits on a cycle. Then you go to the high, which is on this candle right here.
Yeah.
And then if you go to this one, it hits right there.
23.
Yeah. But this one doesn't count, because I'm looking at this leg. So I'm looking at low to low to low to low, and it fits nicely. So if this keeps that same pattern, that next low is July.
Oh, I like that.
And that's where I got my July from.
I like that.
So I don't know if July is going to be the right answer, but that's what I'm kind of looking at on timing. Now, when it comes to price of where that could be, this is kind of interesting too. If you've got, I don't have it all marked up, but if you like it, look at this as a 1, and then you got this little consolidation as a 2, and then you have this 3 that's kind of extended. So you got this 1, 2, 3, 4, 5 extended, and now we had this 4 to the upside here. So this, and then if you get the alternation in here, you got a little bit of consolidation, and this is more of a spike up, spike down. And when I say alternation, wave 2 and 4 are usually opposites of what they are, that kind of stuff. So I didn't really mark it all, and it might not be the most clean Elliott wave ever. But one thing I'm looking at is if this is a 3 extended, which definitely looks like one. If you take the percent change off of the move from the high here to the low, you have a 105% that it went from this point to here. Now, and then you could take all the other ones if you wanted to, but I'm really looking at just wave 1, because to me, if you get a 3 wave extended, wave 5 should match match wave 1 slightly. So like if you took this one and then looked at this leg, you're looking at 200%. And then this leg, I think, was like 100 and something. I just can't remember. Yeah, 122. And then you go down to this one, and then you're looking at so far 69. Oh, good number. I'm just kidding. But so you walk out and then it pops up. But if you take the percentage here, which was basically 100 and something percent, and you do it from here, right now you're sitting at 27 or I don't know, somewhere right around there. But if you extend this out, let me squinch this up a little bit, and if you get this to go 100%,
we're going to need a bigger chart.
Yeah, well, the 100 and something percent, I think it was like 103, puts us pretty close to that 209 that I've talked about before. So
that is beautiful.
So that's why I'm kind of leaning. Now, of course, if this all breaks down, this all goes to shit. But if we hold support here and we start to make new highs after holding,
and you give refunds on these targets as well, right?
Yeah, exactly. So right now, I know this looks weird on this chart, but if it wants to keep this timing the way it's working, then from now until basically, I mean, this is a monthly, so anytime during the month of July, then we could be up at that 20. This one marks around 203 or whatever, but that's close enough to me to say, hey, maybe we're going to get to the 618, and I think it's off of this one. So if I put in the 618 here, 209 is going to be the level. So that would be about 111%. I mean, that's not much different than the 100. I mean, not much.
I'll take it.
Yeah. So I don't know if this is all going to work or not, but I like the pattern of it. It's acting very nicely. So if this is going to hold here, the 100%. Now, if it goes all the way to the third, just say it goes all the way to the 85, and then we only get the 103%, then you're looking at about 170-ish.
Not enough.
So anywhere between 170 and 209 could be, depending on what happens if we get to that 85 first, or if we hold here and go higher. I still like holding here and going higher, and that 209 still hitting, because even though it looks different on the pattern this time, every time it's hit the 3618 without breaking the bullish structure. So if it holds, I still think that 209 could be a nice target to look for. And maybe we only hit the 170 here if this happens, and then we pop back up and 209 comes later on in the year. That kind of thing.
I think your intuition on this is right. If things are going to continue, then I think it's a lot more likely that the low is basically in or around that 97 region. I'll explain why just super briefly. One of the things I've been looking at is just the monthly MACD. Super simple, as you know, and it would actually get its first cross to the downside this whole cycle if we do see a monthly close below about 97.5, which is kind of close to your to one of your major fibs holding this current correction up. So, if it really comes down below there and we see closures below there, I would have a hard time seeing even 86 hold. I think we'd get a massive bounce off of that region, to be honest. But that's usually been a death sentence for every cycle. I mean, of course, at some point that's going to break, but it's been pretty good up until now, at least.
Yep. No, I'm with you. And that's where risk management comes in. If I come down and I buy it at that 85 and it ends up breaking back below, then yeah, I'm going to take a little bit of a loss and reestablish. Yeah. But like I said earlier, like if it breaks that 85, I don't know, man, it could get down pretty freaking hard.
Let's do a hypothetical. Let's say that does happen. Where would you expect, or a range you would expect for the quote unquote low?
I go by fib extensions. So this 74 to the high, if it goes down, this 61.8% level, if it ends up breaking this 80 area, 57.7 falls inside my fib extension zone between 53 and 60. So I'm looking at mid 50s, man, if that ends up breaking.
Yeah. It's also just a good base, prior cycle high. That
you look at all over here. Yeah, you got a lot
of technical things around there.
Yeah. So that's kind of the area that I would be looking. So basically, just so people can kind of see it a little easier, if you go all the way back here in that fib extension zone, you're looking at, all of this was resistance, and then broke to support right here. So to me, it would come back down and test this as support.
Right.
If it happens, but hopefully not.
Big hypothetical.
I mean, if it does, then we just go beep, beep, beep. back that truck up, baby. Open those doors.
Hell yeah.
Yeah. So yeah, that's where I got my timing of not hitting the 209 by the end of the year, which, I mean, I guess you still could if everything just went ballistic, but I'm not saying that's going to happen. But so I got to kind of take that out of my equation, and I kind of took that out once the daily went bare.
It's always an evolving picture, of course.
Yeah. So that kind of took the 209 away from the end of the year. But as long as the structure holds, that 209 could be extended, because if it holds here, that means that the 4-year cycle is not there anymore, and we're on a whole different kind of world. Which I think we already are, because this time is so different compared to what we had in the past. Yeah. With the amount of money that's just sitting out there waiting for dips and all this kind of stuff. But we'll have to see how that goes. But that's where I'm at. 209 by July is still in play.
209 by July. I like it. It, man. Yep. Yeah, that was awesome. That was absolutely awesome as always. Thanks, I can assure the viewers I will have a beautifully ChatGPT crafted clickbait title for this video. Something to go with 209 still. People seem to really love that target, but yeah, I'm glad for you to always update your views, and of course you're welcome to join on this channel anytime you want, anytime you have a major update. I love speaking with you. I love going super nerd on this shit, and that was a great presentation, man. I really appreciate you coming on.
All right, you bet. I have a good time every time I come on here. It's awesome.
Hell yeah. Everyone, Swanny's links will be in the description below. You probably already know him, but in case you didn't, he is on Twitter. You're not actually on Twitter anymore, are you?
No, I am kind of done with social media, dude. So
dude, I had the same realization this past week. I had to delete it. Like I don't read it.
I don't know if it's the best business decision, but
no, of course not. But
I'm keeping the account.
Mental health, man.
Yeah, I just don't see any benefit from it. There's just nothing there. So it just me personally, I just kind of stepped aside a little bit. All my stuff is at TWC.
Okay, cool.
With Christopher Inks. I just moved all my stuff over with him a couple of years ago, and we've just been kind of working over there. So that's where I'm kind of housing my stuff. And I do your show and I do his show, and that's really all I do. Because I just, the social media thing just, I don't know.
I get it, man.
Something happened over the last 2 years. It's just a bad echo chamber of bullshit now is all it is.
I think it always has been. I just think I started paying attention more recently.
maybe that's it. So for me personally, I just kind of stepped aside from the whole social side of the world, but I'm still working strong.
It's good to get your content out there, but I agree. Just hearing so many different opinions from people is not like, we're not meant to do that as humans. We're not meant to have the opinions of thousands of people thrown at us, good or bad, to be honest. Yeah, man, I totally respect it. I totally understand it. So everyone, the links will be in the description below. And check out Swanny. Of course, he's got a great system. He has a real system as well. I always support that sort of stuff because one of the one of the most diabolical things about social media is just people pretend, you just guess where the price goes. And of course, everything has to come down to objective indications for entry, exit, and risk management at the very fucking basis. So yeah, man, thanks again for joining in. We'll have everything below, and we'll bring you on as soon as you have another update.
Yeah, let's see how this next couple of months go, and we'll reconvene unless something crazy happens before then.
Yeah. All right. Take care, everyone.